I was talking about the migration out of major cities and into other areas. What does your research show you?
Absolutely. Thank you for having me, Alex. I think the migration we've seen from these large gateway cities is largely temporary. I think we sometimes forget we're still in the middle of a health and economic crisis. So that migration is a reflection of that. But as you and Guy pointed out, not all cities are faring the same. It's really gateway cities where we're seeing migration. On the other hand, medium density cities like a Phoenix or a Dallas or Atlanta have actually continued to thrive.
What kind of occupancy do we need to see, Paula, in terms to get to the kind of network effect where being in a city has a benefit?
So cities have long been very important. Over a long period of time, especially large cities have been where you've experienced above average economic growth, prosperity gains, and productivity gains. In terms of occupancy, the density that you can get from cities by clustering firms, consumers, investors, and universities are all very important. So that high density is actually pretty important to future growth. Particularly as we see going forward, we're worried about slower economic growth given the debt burdens that both we face nationally as well as corporations face.
I'm glad you brought that up because right now we're showing a chart from your report that says that city rents are eating up income, and it shows high density areas and medium density areas and how those that make money up to $30,000, then $45,000, then $75,000, how much of their income they actually pay in rent in the cities is just so much harder.
That's right. And that's been, and by the way, this trend that we're talking about is not new. Affordability has been the core driver of the migration we saw even before COVID. And to your point, Alex, the reality is that the average middle income consumer is spending 30 to 50% of their income on rent if they live in high density cities like a New York or a San Francisco. Medium density cities are just more affordable. And your other point, in terms of rent trends, there are a lot of articles, like you mentioned overnight, at how much pressure gateway cities are facing in terms of multifamily values. But the reality is that in places like Dallas or Atlanta, prices and rents are holding up quite well.
In terms of what we can take away, though, from COVID, we have learnt new skills. We have learned that we can do things in a much more sort of disaggregated way. When you talk about going to these medium-sized cities, is that part of that trend? How much sort of acceleration are we going to see as a result of COVID in that trend towards those cities? Because we've learned that we don't necessarily have to be right on top of each other. We can spread out a little bit. We can have some of these meetings, not all of these meetings, via the network and some of them face-to-face.
Absolutely, Guy. I think the market story is something we see as an acceleration of trends we saw before COVID. But the new trend we're talking about is really investing behind remote work. If you think about it, this summer, 46% of workers worked from home full time, and there weren't as many productivity losses as many would have guessed. In our discussions with CEOs, many finance and tech executives in particular expect significant increases in remote work going forward. So in general, to your point, we see in-person visits or meetings, both for personal or work, occurring only when they're safe, necessary, or highly valued. And that will have an impact on a wide range of industries.
So, Paula, I feel like this has been a trend that we've been talking about since COVID started. Can you still invest in this and make money?
You certainly can. I don't think that this is consensus, that we will see significant increases in remote work. I think there's actually still a great deal of debate. I'd lean into a couple of categories in particular. So in travel, I see that international travel is going to face significant headwinds. If you think about the weaker dollar outlook, a focus on cost cutting, again, amidst that slower economic growth we're talking about. And as Guy mentioned, the increased comfort with video conferencing, that's going to slow international and business travel. And in its place, where I'd lean into is domestic travel, which should benefit new and used autos, home sharing businesses, or even outdoor equipment.